Have you ever looked at a price chart and wondered how professional traders seem to predict market moves with precision? The secret lies in price action. In this video, I am breaking down the best price action trading strategy that will completely change the way you trade. No indicators, no complicated setups, just pure price action, pure market movement. Okay. Now, price action trading is all about reading the market's movement. Okay. Instead of relying on lagging indicators, this strategy focuses on what price is actually doing in real time. If you master price action, you'll be able to spot high probability trade setups, manage risk effectively, and develop the confidence to execute trades without second guessing. So in this video, we'll cover the key principles of price action trading, the most effective candlestick patterns, how to use support and resistance levels like a pro, and a step-by-step price action strategy for making better trading decisions. So, what exactly is price action? Simply put, it is the study of how price moves over time. When traders analyze price action, they look at candlestick formations, trends, and market structure rather than relying on external indicators. So price action is universal, okay? It works across all markets, whether it's Forex, stocks, or crypto. Since price reflects market psychology, learning to interpret it gives you a huge edge over traders who blindly follow indicators. All right. Candlestick patterns are one of the most powerful tools in price action trading. So here are three essential patterns you need to master. Three essential patterns that you need to master. The first is pin bar, right? Which is a reversal signal. This pattern signals a potential reversal in price. Okay. A long wick shows strong rejection. For example, we can see what happened around here, right? You can see the pin bar that formed around here. So a strong wick shows strong rejection, or rather a long wick shows strong rejection, meaning the market tried to move in one direction but got pushed back. Okay, after attempting to go further downwards, the bulls prevailed and pushed the price back up. Okay, then we have the engulfing candle. It's a bullish there is a bullish engulfing and a bearish engulfing. Okay, a bullish engulfing candle forms when a large blue candle completely covers the previous red candle, like what we can see happen here. Okay, this signals strong buying momentum. Okay, a bearish engulfing candle, on the other hand, does the opposite. It's when the bearish candle completely engulfs the previous bullish candle, when the red candle completely engulfs the previous blue candle, and you can see an example here. Okay, now we also have inside bar. This pattern represents market indecision. A breakout above or below an inside bar often leads to a significant price move. Now, one of the core elements of price action is support and resistance levels. These are key price areas where the market has reacted strongly in the past. Support is a level where price tends to stop falling and reverse upward. Resistance is a level where price tends to stop rising and reverse downward. Okay, the key to trading with support and resistance is confirmation. You don't just place a trade because price reaches a level, okay? You wait for price action signals like pin bars or engulfing candles to confirm the trade setup. Now, let's just put everything together into a simple yet powerful price action strategy. The first step is to identify key support and resistance zones. Okay, look for strong price levels where the market has reversed multiple times. All right, then you wait for a price action confirmation. Reaches a support, if price reaches a support, look for bullish signals like pin bars. For example, you can see this pin bar that formed here. Can you see it? You can see this. You can see this pin bar that formed here at this support zone. So when you find any bullish candlestick pattern at all, whether it's an engulfing or a pin bar around a support, that's a good sign. Okay, but if price reaches resistance, you can look for bearish confirmations. Then you enter with a proper risk management plan. Place your stop loss just beyond the key level and aim for a risk to reward ratio of at least 1:2. Then you let the trade play out. For example, if you're going to enter a buy trade around here, perhaps after this pin bar formed, you can set your stop loss below below the support level, okay, some pips below. All right, then you can be targeting your risk to reward ratio of at least 1:2. If you're risking about 150 pips, be targeting at least 300 pips. All right, so if you're setting your stop loss around here, then perhaps your take profits can be at the next resistance, or just be watching out for possible price reversal signal. But just ensure that you are trailing your stop loss if price gets to a particular resistance zone and perhaps it has not yet reached your take profit level. Okay, but this would have been a good place to set take profit around this resistance zone. It's going to be a good place to set a take profit. All right. Okay, do not overthink it. Okay, once you've entered your trade, just allow it to play out. Stick to the plan, manage your risk, and let the market do its thing. All right, now price action is one of the most reliable trading methods used by professionals worldwide. Mastering this approach will improve your ability to read charts, spot high probability trades, and gain confidence in your decision making. If you found this strategy valuable, hit that like button, subscribe for more powerful trading insights, and turn on notifications so you never miss an update. Now, let me know in the comments, what is your favorite price action setup? Let us discuss. Thank you for watching, and I hope to see you in the next video. Happy trading.